to Helping Students tutorial. This time around, I will be taking you through the trading profit and loss account, which is also known as income statement. Then there are some things you will need to know about trading profit and loss account. What is trading profit and loss account? Trading profit and loss account is an account which is used to show the financial performance of an organization. So if you want to show your financial performance of your organization, it is very, very good for you to use your trading profit and loss account. And as it is called now, it is being called income statement by the International Financial Reporting Standard. Now, let me tell you the uses of income statement. What are the things you will need to use income statement for? The first one is for you to use income statement for your financial position, to show your financial position. That is the first thing. Then the second thing you can use your income statement to show is your gross profit. That is the profit from your operation, from your day-to-day activities, the profit you get from it. Then the last thing you can use income statement for is to show your net profit. Your net profit means after the addition of your other incomes and the deduction of your expenses from the gross profit. That is when you now have your net profit. Then now let's move to the next one, which is the elements of income statement. What are the things that you will need to find in your income statement? The things you will need to see in your income statement, which is the first one is the sales or revenue. If you don't call it sales, you call it revenue. If you don't call it revenue, you call it turnover. Then let's now move to the next one, which is the cost of sales. If you don't call it cost of sales, you can also add it as cost of goods sold. Then the next one is the gross profit. The gross profit is another element or another thing you will need to see in your income statement. So you have to see your income as well. You must show the column for your income. You must also show the column for your expenses, and you must show your net profit at the end of it. Then I have prepared the format of income statement. How should an income statement looks like? I have prepared it for you. Then I will explain a little things on it. Then now this is the format of income statement. The first thing you will have to have there is your sales. What does your sales mean? That's the sales you made with the goods you produced or with the goods you purchased. The sales you made. Then let's assume you have made a sales. Some customers decided to return some of the things you have sold. So if they should return some of the things you have sold, we call it what? Sales returns. So you will have to deduct the sales returns from your sales. Then you will now add your net sales. That is the first one. Then the other one you will have to have here is the opening stock. When you have the opening stock here, that's the stock you have from last year that you bring to this year. That is the meaning of opening stock. You will have to bring down the stock from last year to this year to start your inventory. That's the first one. Then your additions, your additional purchases, you will have to add it to the opening stock. Then before you add the purchases to the opening stock, just open a column for the purchases alone. Then because there are still some additions you will need to make to your sales before you can add it to your opening stock. Now let's now make those adjustments. Now let me show the adjustment for you now. And this is your purchase, right? You have your figure here. Then your carriage inward. What does carriage inward means? It means, okay, let's assume you purchase a goods from an outsider or from your supplier. Okay, then there are some transportation costs you will have to incur. Those kind of transportation costs, we can add everything together, or goods in transit and everything. We can add everything together to form part of your carriage inward. When you have carriage inward, it is a cost to you. So the cost you incur in bringing the goods to your normal location, okay, if you add it to it, this is what you are going to have. The figure you are going to have, you will have to write it here. Then now let's now assume the customer and you return to your supplier some of the goods probably some of the goods your supplier supplied to you. has spoiled, or some of them has been damaged. So you will have to return those parts of it. You will have to return it back to your suppliers. So when you return it back to your suppliers, then deduct it from your outstanding sales. When you deduct it from your outstanding purchases. When you deduct it from your outstanding purchases, then what you will now have, you write it here to be an addition to the opening stock. When you add it to your opening stock, the figure you have will be called cost of goods available for sales. That's, you have it at hand. That is the cost of goods you can sell at that point. Okay, then now let's now assume you've made some sales. So the goods you did not sell, you will have to deduct them from the goods available for sales. Then when you deduct the goods you did not sell, the goods you did not sell, you call it what? You call it closing stock. You call it closing stock. Then the closing stock, let's now deduct it from your goods available for sales. When you deduct it from your goods available for sales, okay, then what you will now add is your what? Cost of sales. You add it as your what? Cost of sales. Then your cost of sales, you will have to deduct it from your sales, from your normal sales that you've made. What do you have? You have your gross profit. You have your what? Gross profit. So these are the things that are very, very important while solving, okay, that you will need to show. The first one is the what? Is the sales. Then, you know, I've told you earlier, I said cost of sales should be what? Should be part of the elements of what? Of the income statement. So you will have to show it. So can you see I've asterisked the cost of sales for you to know? Then the next thing that is very, very important for you to get is the what? The gross profit. Okay, then after getting your gross profit, then there are some additions and subtractions you will have to make for you to get your net profit. Now let's now quickly go to the additions that you will have to make to your gross profit. The additions will be what? The incomes. You have to add incomes to your gross profit. Now the incomes you will have to add include the rent receivable, that is the rent you received from either your tenants or, you know, that it is where you get your profit from, okay, that you will have to add here, that will have to be part of your income. So in this your rent receivable, it means, okay, probably that is one of your profit center or your revenue center. So you will have to do what? You will have to add it as part of your income. So that's okay. Let's assume you run a mortgage company, okay, and they pay you rent every year, okay. So if they should pay you rent every year, so it means the rent is an income to you. So it is an income you receive. It is an income you receive every year. So you will have to add it as part of your what? As part of your income. Discounts received. Discounts, that's the discount you received from your supplier. The discount you received from your supplier. Okay, let's assume you have been expecting to buy a certain amount of goods for 5,000 naira. At the end of the day, when the supplier notices that, wow, you are a good customer, wow, you pay well, or you buy in bulks and all those things, okay, so the supplier will have to do what? We have to reduce price for you. So the price that he or she has reduced will have to be your what? Your discounts received. So as it is your discount received, it is an amount that comes into you. So it means you will have to do what? You will have to put it as part of your what? Part of your income. So in accounting, there is something I want you to know. We use reality over legality. That is substance over form. We use substance. How things happen is what we use. We don't use how it should happen. We use substance over the form of it. Okay, let's assume you have an envelope. Okay, in the envelope you will notice in an envelope you will notice there is a letter inside the envelope, right? So inside the envelope is what the reality is. Okay, it is not the envelope that you are seeing that is the reality. Okay, the envelope will just be the what? The form. or the legality, while what is inside the envelope is the what is the reality, that is the substance. Okay, so which means you must show the substance while serving in accounts. You must show the substance, which is like, okay, this thing now, you know, some people will feel like, okay, right, I bought the goods, okay, right, I'm supposed to pay 5,000 naira. I didn't pay 5,000 naira. Okay, let me quickly write the 5,000 naira as part of the sales. No, they don't do it like that in accounting. Okay, you only write, what you do is to write the 5,000 naira in as part of your sales. Then your discounts received will have to be reflected. You will have to reflect your discounts received here in the income side. Then sometimes you have commission received. Okay, that's for the services you rendered. You receive commission for it. Then that commission you received from it will form part of your income as well. And there are some other ones too that you are likely to have here, which is like interest received. Okay, let's assume you normally incur some you normally earn some other fees like that. Those other fees that you normally incur, you can write it there as part of your income that you normally earn. You can write it there as part of your income. So I think we are done with the income aspect. So the addition of your income, you will have to add it to what? To your gross profit for you to add this amount here. Okay, for you to have this figure here. So when you have this figure, now for you to get your net profit now, you will have to less expenses, all expenses from this. Okay, now for example, if we are talking about expenses now, expenses starts with, let's say, salaries and wages. It starts with, let's say, salaries and wages. If you are talking about salaries and wages as an expenses, okay, it means it is an amount which you pay to your workers, okay, for job well done, or for the service or for the work they've done for you. So that is what salaries and wages. And also we can also have advertising. Okay, that's in promoting your goods, you can advertise. And also you can have stationery expenses, you can have rent expenses, you can have rates, you can have so many other expenses like that. You can incur so many. So after you've added all the expenses, you will have to do what? You will have to less it from the additions of your incomes. Okay, when you less it from it, you get your what? Your net profit. And there are some things that I would like to point your attention to. Okay, there are adjustments that are made to incomes and expenses. Okay, we have so many adjustments you can make to what? You can make to income, and you can make to expenses as well. So which is, okay, let's say you have accruals. What do you call accruals? Accruals are services that you have enjoyed that you've not actually paid for. So when you have accruals as part of your additional information in the question, you will have to add accruals to the expenses. If it is an accrued expenses, okay, that accrued expenses or that accruals, you have to add it to what? To the expenses. Okay, for example, let's say we have salaries and wages. And in the additional information they told us that we'll be having accrued salaries and wages. If you are having accrued salaries and wages, it means, let's say 500 naira is already the salaries and wages, and we now have accrued expenses of 60 naira. Okay, that 60 naira will have to form part of that previous 500 naira, which is in your trial balance. So you will have to say, okay, 500 naira plus what? Plus 60. It will now give you 560 naira if you are doing what? Preparing your income statement. Okay, so as it applies to the rest of the expenses as well. Okay, and also income, you can have accrued income as well. You add it to the income, the respective income that is carrying the amount. That's another. So that's that on that. Then now let's move to provisions. Wow, provisions. In provisions, students get this very, very difficult, and now I feel I can explain this to you very well. Okay, now let me now explain provision to you. Provision. What does provision means? Provision means the amount you set aside for a specific purpose. The amount you set aside for bad debts. That's the debt that you know that yes, there is no way you can get it back. That is the kind of things you can make provisions for. You can also make provisions for discounts allowed, discounts received. That's discounts you want to receive, that though you are not sure that you are going to receive the discount, but you will receive it. Okay, so you can make provision for that kind of discounts as well. Then now let's now start from that provision. In provision, then you can have increase in provision and you can have decrease in provision. If you are having increase in provision, okay, you will have to make it to be part of the expenses. Okay, you will have to add another column to your expenses and say, okay, provision for bad debt. That's if you are having an increase, so you have to say, okay, provision for bad debt, you write the figure as part of your expenses. But if you are not having a decrease in provision for bad debts, okay, if you are having a decrease in provision for bad debt, it will have to form part of your what? Part of your income. So you have to do what? Form part of your income. So I feel we need to solve questions so you can get this better.